What's up, everybody? Andy Bassett, president of Ellerbrock-Norris here. Wanted to get a video out to talk through something that just came across our desk from one of our partners, and it's the 2022 property casualty insurance market outlook. And so we thought there were some interesting things we wanted to get out there, and then we'll continue to dive deeper into some of these areas over time. Certainly reach out to us if anything you hear in this kind of strikes up questions or whatever. The report itself is like 38 pages. We certainly have the entire thing that we can share as well. But what were some of the kind of trends that it identified in 2022? I think there are things a lot of us already know, but labor shortage, it's a real deal. A SHRM study recently said 90% of companies are having a hard time filling positions. We have supply chain issues. If you bought anything, you've experienced it. Inflation is certainly real. CPI at over 6%. That's going to undeniably impact insurance pricing. We've got things like social inflation. What's that mean? We have litigation funding, where we actually have third parties that are funding lawsuits to take part of the settlement as a return. We have tort reform pushback, which could seriously and significantly increase the potential size of lawsuits. And just large jury awards. All of that impacts the pricing, future pricing of insurance. And then another thing is extreme weather seems to be becoming the norm, and we can relate to that here in Nebraska where I'm shooting this video, because we had a significant weather event on December 15th, which is just not normal. So all of these things kind of start to play a factor. What's really important is, what's that mean? What's that mean for all of us as consumers? And so ultimately, cutting to the chase, the forecasted trends from a pricing standpoint are as follows. Commercial property insurance, expected increases of +5 to +15%. General liability, 2.5 to 15% increases. Commercial auto, the potential for 10 to 25% increases. Workers' compensation, a little bit more favorable, maybe even slight decreases to single digit +5% increases. Cyber liability, 15 to 50% increases in cost to be the trend. Things like directors and officers liability, very similar, 5 to 35%. Employment practices liability, 10 to 25%. So these are big things we need to pay attention to and understand. This is what the trends are telling us. So let's dive a little bit into some of those. Specific to commercial property, what's driving that? Natural disasters, we talked about it, becoming more frequent. Supply chain and inflation issues. Stuff costs more when we have to rebuild. So this stuff gets real when we talk about insuring property. How about commercial auto? Again, we're talking potentially 25% increases. Nuclear verdicts. We're seeing larger and larger verdicts across the country that just have massive dollars behind them. We've got driver shortages are a real thing. So, we have more events happening when we have less trained and maybe worn out drivers on the roads. Distracted driving remains a significant issue. Marijuana legalization, exposures, and things of that nature. There's a lot of stuff going on that's driving the cost of auto insurance, and we need to pay attention to it. Cyber liability. We could probably talk about this forever. I mentioned it earlier, 15 to 50%. It's quite shocking, actually, and we've experienced it. A lot of our clients have experienced it. The big things to understand here is the costs are going up. The claims are happening. COVID sent a bunch of people home. We got onto unsecured networks at our houses, and things just started to kind of unwind from there. So underwriting's tightening significantly. Pricing's going up. Ransomware being the one that's driving that significantly. But pay very close attention. Ask questions and understand that is a big part of where we're seeing significant adjustments in pricing. D&O, directors and officers liability, again, the potential for large increases there. A lot of that's being driven by some of the COVID-19 impact that we aren't, entirely sure about at this point. What's going to come of some of the potential litigation that could come down the road from decisions companies are making specific to the current pandemic we're in. What else is in here? I'm just kind of sorting through this. Again, it's a 38-page document, but we get into things like employment practices liability, another area where pricing, prediction is 10 to 15, 25%. Again, pandemic-related stuff, vaccine mandates, some of these other things that, the government, frankly, is kind of putting at our discretion to figure things out. And it's going to cause concern around, what might develop from a litigation specific to that. So a lot of unknowns, and when we have unknowns, we see trends in pricing go the wrong direction for us as consumers. Another area, general liability insurance. I already mentioned the social inflation stuff. Just the size of litigation continues to go up and up, and that impacts all of us when we talk about liability and the protection that those insurance policies provide. And then finally, workers' compensation, actually probably the most stable of all, fortunately. So, you talk about potential flat to lower single-digit increases. That's good. That's actually because of a lot of great things. There's great technology out there, whether it's wearables, whether it's telematics, different technologies out there to help us navigate and work safer. So there is a positive there, but at the end of the day, I think the thing to pay attention to is the outlook suggests that us as consumers are going to bear the burden of a lot of the things that are going on, and the likelihood is that costs are probably going to have some pressure to go up. It doesn't mean they have to go up for all of us by any stretch. I think it just means we got to pay attention to what we're doing to manage risk and navigate through that in our businesses every day. We cannot control everything that takes place in the insurance markets, but we can absolutely control how we manage risk in our businesses, and then how that's displayed in the underwriting market when we go out to secure and purchase these insurance policies. So when we got this and we saw it come across our desk, we felt it was very important to get the message out there that, hey, let's pay attention to this. If you're a client of ours, please reach out. I know our team will be reaching out to you. And if you're not, feel free to reach out to us. We're happy to kind of navigate through this and provide advice and see if we can help. So, that's kind of what the 2022 trend from a property casualty insurance market outlook is. I know it seems bleak. It's not all bleak. We can navigate through it, but I think we also have to understand what we're up against here and what the reality of the situation is. So at that, again, Andy Bassett here. Happy to be with all of you again, and we'll talk to you soon. Thanks.